Well, up next for our Best in Class, we're joined by a Bloomberg Best, Rajiv Jain, who's the Senior Portfolio Manager at Vontobel Asset Management. Jain joins us to discuss his Bloomberg Best in Class Fund, which is the Virtus Emerging Markets Opportunities Fund, which, according to Bloomberg, has outperformed its peers on its 1-year, 3-year, and 5-year returns. So a great performance. Rajiv, thanks for joining us.
Thank you.
And everybody wants to know what's going on in emerging markets, right? I mean, we all say the growth is there, the growth is there. But a lot of uncertainties. Number one, currency risk. How are you protecting yourself or managing that risk?
It's that's actually interesting because from a currency perspective, emerging markets are probably positioned better than a lot of developed markets, right? So
why is that?
Well, if you look at the balance sheets of most of these countries, I mean, they're in reasonably good shape, unlike the 90s when they were under the gun.
When they had too much leverage?
There was too much leverage, too much external deficits, fiscal deficit, and so on and so forth. It's actually just the mirror image of what's happening on the developed markets. So things have kind of turned around. Not every country, but by and large. So there's probably more currency upside.
Okay.
Less on Brazil because, as you know, that is remarkably well.
Right.
But the pressure is on the upside.
But the currency risk in the sense that, a lot of these, not just emerging markets, but overall the currencies around the world are devaluing, getting weaker and weaker. That's going to crimp growth, particularly in some of these developing nations, is it not?
No, that's absolutely true. And in fact, if you look, take it now on the equity market side, we feel that Asia, and particularly Asia, the growth expectations are a little too optimistic. Because
in China?
China, from an equity earnings perspective.
Okay.
Because a lot of the corporate earnings are still dependent on exports. In fact, if you look at the numbers, 90% of Korean exports to China are for re-exports outside of China. So I think the whole discussion about intra-regional trade, I think, is a little too optimistic.
Okay.
And we're really focusing on domestic.
So does that mean that you're avoiding some of those countries then on an equities basis?
It's not so much a top-down call. It's more where the earnings drivers are. So, for example, if you buy Samsung, you're really making a call on global growth. You're not buying emerging markets.
Okay.
Right. So you really kind of have to focus on domestic growth. So if you look at Amura Pacific in South Korea, which is a cosmetics company, or ITC in India, or AmBev in Brazil, they're really domestic consumption stories. That's where we are excited about.
Well, that's what I want to talk to you about, because I know a couple of your picks are, for those of viewers who don't know, Housing Development Finance Corporation, which is in India, listed on the Bombay Stock Exchange. But, I mean, is that a play? Essentially, what are they? Like, they lend, right? They're the biggest mortgage lender? Is that what it is?
Yeah.
Okay. And is that a bet on the rising middle class in India, or what?
Well, this company has been around for over 33, 34 years. So it's not a, it's not a recent story or something,
Okay.
The mortgage penetration is still extremely low. These are one of the lowest cost producers of mortgage, because mortgage essentially is a commodity. You don't really care whom do you go for a mortgage, right? So as long as the rates are okay,
and the service is okay, yes.
As long as it gets paid.
Right.
So that's what the call is, and they've done a remarkable job in terms of as there's more. More money, more job creation, the mortgage growth is going to be there. Mortgage penetration is half of Thailand's mortgage penetration.
Is it?
So it's big.
Okay.
Big. We feel there's a lot of headroom.
And just quickly, Rajiv, AmBev, which is Latin America's largest brewer, we know some of the brands there. Is that just also play on Brazil and the huge growth there?
It's a combination of that. It's a call on the fact that northern Brazil is growing a lot more rapidly. Northern Brazil, because of the commodity boom and stuff. Beer consumption in northern Brazil is half of southern Brazil, for example. Right? Volume growth, we feel, should be at least 3 to 4% range, which basically translates into double-digit growth. And this is not dependent on the U.S. European economy. And I think that's important to note, because if you look at the emerging market index, 60-odd% of their earnings are dependent on global growth. So people, I think, when you buy an index, you really make a call on global growth, not so much emerging markets.
Right. Not so. Okay. All right. Thank you so much, Rajiv. I appreciate that for that perspective. That was Rajiv Jain, our Best in Class.